So if you think real estate investing is all about cash flow, I got news for you. That's the slowest, most exhausting way to build wealth. And worse, it's what's keeping most investors stuck playing in a small game. So let's get something straight. Everybody's chasing cash flow. So I've read Rich Dad, Poor Dad, and you want passive income, financial freedom, all that good stuff. You're thinking, if my passive income covers my bills, I'm free. So it sounds good on paper, but the reality, it takes $5,000 a month in net cash flow for rentals, and you have to have 15 to 18 properties to do that. That's roofs, tenants, maintenance, debt service. And you don't really become a millionaire by doing that. You become a property manager, and that's the last thing we want. So what's the real move? There's a book called Tax-Free Wealth by Tom Wheelwright, and in chapter 7, he talks about depreciation. And it sounds like a loss, but it's a paper loss. So in real estate, depreciation is a legal IRS-approved way to wipe out all your passive income on paper. Here's the magic. So let's just say this: buy $1 million commercial property. It's depreciated over 39 years. That's roughly $25K a year that you lose on paper. So if you're earning $25K in passive income, you zeroed out your tax bill, which is awesome. So no taxes on $25K. That's pretty powerful. But here's how it gets better. So in 2016, Trump passed the Tax Cuts and Jobs Act. So then we have bonus depreciation. That means you can front load a large portion of depreciation in year one. Here's how. Hire someone to do a cost segregation study on your property. They break down the items you can depreciate faster. Think about appliances, parking lots, lighting, HVAC. You take all of those write-offs up front. And in 2025, you get 40% bonus depreciation. So let's just say on a $2 million building, you're looking at $250,000 in write-offs in year one. So let's make it real. So if you're a doctor, lawyer, engineer, and you make $250K a year, you buy a $2 million triple net lease commercial building. The seller carries the down payment. You bring zero of your own money to the table. You do a cost segregation study, plus bonus depreciation equals a $250,000 loss. So if you make $250,000 in your W-2 job and your spouse qualifies as a real estate professional, meaning like 750 hours a week or 2 hours a day, you pay zero income tax. That's a $100,000 tax refund from your withholdings, and you still keep the $50K in passive income from the property. So don't think the government's trying to screw you. They're not. The tax code is just a system of incentives. If you're paying high taxes, it's because you're not doing what the government wants you to do. The feds need housing, they need energy, they need jobs, they need all that stuff. And investors who can provide those things get rewarded with deductions and credits and bonus depreciation. So here's what we do. So DM me, hit the link, and book a call. Let's just talk strategy, how to do this, and let's try to build some wealth the smart way. Look forward to talking to you.